Hey everyone, it's Zach back with a new mortgage video. Hope you all had a happy Super Bowl weekend. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So on today's Monday market update, I wanted to talk about kind of the back half of last week and preview this week, where there's going to be a lot of inflation data which should affect mortgage rates to some extent. Last week we had, over the weekend, the announcement of these massive tariffs, which were then pulled back, first on Monday, Mexico, and then Wednesday, Canada. And that was received well by the markets. However, Friday, we got the biggest combo of jobs reports, unemployment rate, and non-farm payrolls. Non-farm payrolls came in a little lower than expected, which is a good thing for mortgage rates. However, unemployment came in lower than expected. That seemed to be what the market was more focused on, and mortgage rates worsened a little bit. Ultimately, kind of same place that they started the week out. Now, this week, we have a lot of inflation data. The first week of the month is the week where you get a ton of jobs data. The next week is the inflation week. So Wednesday is going to be the biggest day, I would expect, for mortgage rates as we get Consumer Price Index, or CPI. This is the first really big inflation report that comes out each month, and it is about 70% tied to the PCE, Personal Consumption Expenditures report, that the Fed is most focused on. It comes out at the end of the month. So within CPI, as I've been talking about for years now, the biggest thing that is keeping the number high, and this goes for PCE as well, is shelter. And what gives me some optimism about this week's report is we're replacing a really high shelter number from last January. We had 0.6% month over month increase in shelter last month. The past 4 months, we've been at 0.2 or 0.3. So if we get even a 0.3 month over month reading, that's going to probably lead to better than expected overall core CPI, which is the metric that strips out food and energy and is the one the Fed cares more about because they can affect it more. And that would be really good for mortgage rates. Now, if it only comes down a little bit, that would probably be a negative, or at best neutral, for mortgage rates. And on Thursday, we have retail sales. Friday, we have producer price index, which are typically not as significant as CPI, but sometimes if they come out dramatically higher or lower than the market is expecting, they can be market movers. Those are going to be the headline things that I'll be watching, but there's always the possibility that we get something on the tariffs or something else from the Trump administration that could affect mortgage rates. It's worth mentioning that really, so far, the tariff news seems to be the only thing that has had any influence on mortgage rates since he's been elected. Beforehand, the nomination of Treasury Secretary Bessent was definitely viewed as a positive, but he's doing a lot of things. Most of it, the market doesn't seem to think is going to affect inflation or jobs at this point, at least. However, if there is something that does move the needle before these inflation reports come out, I'll certainly put out some content on that. Always, if you have any questions or comments, shoot them below, or feel free to call, text, or email me. But thanks for tuning in to this video, and I'll see you next time.